All right, tax season, another fun subject to talk about, is upon us, and we want to make sure that we are all filing things properly and getting the maximum refund.
Now, today we're checking in with our tax expert to see if there are any changes to filing your state taxes. Let's go ahead and talk story with Sam Erwin, an enrolled agent and manager at Hank's Tax Service. We are so grateful to have him back. He's been with us through the month of January.
Thank you, doing well.
Sharing his incredible EK on taxes from Hank's Tax Service. This is Sam Erwin, an enrolled agent, manager, and son of Hank.
Yes, yes.
Sam, if it's okay with you, we want to go ahead and start with onboarding 101 when it comes to HR, human resources, Can you kind of walk us through our pay stub? I think a lot of people receive pay stubs, but we don't know what all those abbreviations mean.
Absolutely.
FICA and blah, 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 whatever.
Yeah, absolutely. So definitely, I want everybody to at least be reviewing their pay stub at least once a month. I know that a lot of it is digital. It's on your phone. It's in your email. You don't have to look at it. The money comes in. That's great. But I want everybody to look at it once a month and try and decode it. So there's going to be a lot of abbreviations. You might see FIT for federal income tax or SIT for state income tax. Okay, then you've got the FICA and the FUTA. Those are your payroll taxes. They're your Social Security, Medicare. That's your contribution. Okay. And then when it's time for you to take it, that's when it's your turn to get the money.
It back, right?
Yep.
So why are you recommending that we look at at least once a month?
Because you want to make sure that the taxes that you are going to owe at the end of the year are properly being taken out. Maybe you misfiled your W-4 and you didn't check that box 2C. And so you're not having enough taxes taken out. And if you catch it early, you can make small adjustments to get caught up by the end of the year.
I got it. So let me ask you a real quick follow-up question as far as your deductions.
Yeah.
Or what you're claiming.
Absolutely.
Do you see people changing that throughout the year, or once they set it in the beginning of the year, that's it?
So most of the time they set it in the beginning of the year and they don't ever look at it again. Sometimes it would need to be changed if you're onboarding with a new job. They're going to make you fill out a W-4. Or if behind the scenes, if the payroll changes, you may be required to fill out a new W-4.
Okay.
But most people, it is a set and forget, which is why you need to take a look at your pay stub and make sure that nothing got set wrong.
Got you.
Because it's very easy to make small changes, but it's very tough when I tell somebody, you got a $2,000 tax bill, when they really could have been taking out $50 a paycheck.
Right. But can we rewind a little bit?
Yes,
because you brought up 2C
Yes.
on the W-4. And I'm thinking to myself, I'm trying to remember what the W-4, because I'm one of those guys that did it once and never looked at it again.
Absolutely.
What is 2C on that W-4?
Yeah, so the W-4 it tells your employer how much taxes you want to taken out of your paycheck. And it used to be a 0, 1, 2, 3, and you can kind of just put 0 and you'd have enough taxes taken out. They changed that in 2020, and now there's a new checkbox called the multiple job checkbox. Now, I call it the I don't want to owe taxes checkbox. And I tell everybody, whether they have one job, two job, you always check that box.
Okay.
Right? And so that is something that I tell all of my clients, is to make sure that when you're filling out the W-4, you check the 2C checkbox.
Okay. Oh, I got to go look back at that.
I think it's even more so we need to be able to take a look at what's happening with HR and our pay stubs.
I mean, everybody in Hawaii pretty much works, 2, 3, 10 jobs. So
or at least in the household, right?
Yeah.
Absolutely. One final question for you, Sam. Credits versus deductions. In my head, I thought they were both the same thing, but I understand that they're not.
No, not at all. Credits, those are awesome. Those are dollar reductions in tax. So if you get a $100 credit, you just put $100 in your pocket.
Okay.
A deduction only is going to remove that from your taxable income. So kind of in that same scenario, if you had a $100 deduction, you're really only putting about $20 or $30 in your pocket, depending on your tax bracket.
Oh, so it's actually, okay, I see. So the credit is actually dollar for dollar, but the deduction is based on the taxes of that deduction.
Correct.
Okay, gotcha.
You're correct, sis. I could have, you might have asked me that.
If you could just move back so I could just talk to Sam. Thank you. No. Well, you know what? We're kind of out of time right now, Sam, but if we wanted to continue this conversation with you, if any of our viewers
course.
want to continue this conversation with you or any of the agents at Hanks Tax Service, how can they do that?
Yeah, well, right now we have our Kapolei and our Pearl City pop-ups going. Those are going to be going through the end of April. And you can always visit us year-round in our Kalihi office or call us on the phone at 808-853-1170.
Awesome.
Yeah.
Get out of my way.
No, I am. I'm going to go upstairs to HR. I got to go review my
You gotta go check them out.
2C. 2C, guys. 2CAT.
Yeah.
2C.
Yeah.
Thank you, Sam.
Of course. Thank you guys so much.
Thank you.
Once again, mahalo to enrolled agent and manager Sam Erwin from Hanks Tax Service for the amazing tips and insight on Money Mondays.
And if you missed any of the segments, check out our YouTube page and click on the Money Mondays playlist so you can receive the maximum refund this year and all of his good tidbits.
Yes, go get it. Go get it. All right.